Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. When you trade and get paid, trade and get paid, trade and get paid, trade and get paid, trade and get paid.
Okay, so what exactly is wave theory? So watch this. Let me grab my annotation again. So let's imagine for a moment that we're looking at a smaller time frame. I'm not going to start the 1 minute, but let's say we're looking at, I'm going to give you yellow. Let's say right over here we're looking at the 15-minute chart. Okay, so 15-minute chart, we get a nice little move. It's pulling back. It extends. It pulls back. It extends. Pulls back. It extends. Uh-oh. It's getting boring, getting monotonous. Well, here's the thing about that. The 15-minute chart, well, guess what? For every time that the 15-minute chart cycles, 2 15-minute candles make up how many 30-minute candles? Right, 1. So guess what? When you see boom, you would say, wow, we got a nice move, 20 pips on the 15-minute chart, looking good. Well, if we were looking at that same exact thing on the 30-minute chart, that would just be 1 engulfing candle. Okay, just 1 engulfing candle. Why is that important? Because here's the thing: when we look at the chart and we see extensions and moves and stuff like this, we see boom, right? So there's a few candles, there's a move. Well, guess what? For every 1 time you see a cycle on the 15-minute chart, that 1 cycle is going to be the first wave of your 30-minute chart. And guess what's going to happen? Every time that happens, you have extension, correction, extension, correction, extension. Eventually, it's going to pull back a little bit. Right? Now, that's not again a reversal, because it didn't set a new low. High, low, or no, low, high, higher low, higher high, higher low, higher high. Low, right? Like a lower low, lower high, lower low, lower high, lower low. However, even though this has everything that says it's a trend in and of itself, the end of that move is not lower than the beginning of this move. So therefore, we don't consider that a reversal. We consider that a pullback. So what's going to happen is every time you see that happen, well, guess what? The 30 minutes also moving. Right? That's not over. 15-minute moves up. Maybe we get a nice push. Right? There's my Picasso. Jordan Claxton, you'd be happy for me, man. I got my Picasso going on. That finishes. Boom. The 30-minute moves. And so the 15-minute moves gives us more information. The 30-minute is moving. 15-minute maybe gets another pullback. Uh-oh, I'm starting to get sloppy now. Let me get better. Let me get better. Hey. Right? And guess what? The 30-minute is right there with it. And so on and so forth. Right? This is just wave theory. So what was a full completion right here, low, high, higher, low, higher, high, higher, low, higher, high, reversal, another trend, counter trend, all of this was just one full wave on the 30-minute chart. High, low, higher, high, higher, low, higher, high. Well, here's the crazy thing about that. For every time we see two 15-minute candles, right, we see one 30-minute candle. But for every two 30-minute candles we see, what do we see printed? A 1 hour. So guess what? For every time we see that whole thing wave like this, there's your larger time frame, right? And so guess what's going to happen? And now I'm going to get a little sloppy just because I want to be a little, for the sake of time, right? We get movement. Boom, 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 30-minute. There's your, so now you're starting to see how each one of these time frames work within each time frame, right? You see how they all work together. So guess what? Here's the next thing. We can continue to go all the way up, right? So if this, so let's say that, let's say this 15-minute chart pushes up again, right? We have extension, correction, extension, correction, extension, correction. This was a deep pullback, pulls back, right? Now do we have a reversal? Oh, wow, we have a reversal here. So now we have a lower low. Well, guess what? Let's say it reverses and comes up, right? And obviously I know I'm way off the chart here, but I'm just showing for you for the sake of time here, right? At some point, it's going to go up. It's going to come up. And then guess what? The 1 hour is going to come up too. Well, guess what's going to happen? At some point, then you get the larger, you get the daily, you get the weekly charts. All of that was just one big wave. All of that was just one move on a larger time frame, on maybe a 4 hour. And all of that, up, down, 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 all that stuff that we see. On the weekly chart, what would that be? Up, down, up, down, up, down, up, down, up, right? So what would be happening on the weekly? Up, down, up, down, up, down, up, down, big deep pullback, up, and then suddenly it pushes up. Well, what are you going to have? You're going to end up having a candle that looks something like that on the weekly. And that would throw us some understanding as to the direction of the overall market. But really, that is only happening as the 15 turns the 30, and as the 30 turns the 1 hour, and as the 1 hour turns the 4 hour, and as the 4 hour turns the daily, and as the daily turns the weekly. You understand how this stuff folds into one another. We can't just look and say, look, it's an uptrend, or look, it's a downtrend. We need to look at the whole picture and understand the overall direction of the market, because that is going to give us market sentiment. And why is that important? Because if we know that this market is moving down and we're looking to take a sell, well, here's the thing, that's fine. We could probably take a sell right here and we'd probably be okay. That little tiny move would be okay to take on a sell. The only thing is, if I'm taking that on a 15-minute chart, I'm looking to take a quick scalp, get in, get out of the market. And I know based on the overall market sentiment that I don't want to hold that trade very long, because the overall sentiment of the market is bullish. Now, can I trade against the trend? Yes. Can I hold against the trend? No. It is okay to take a trade against the trend. It is not okay to hold a position against the trend, because at that point, you are either doing one of two things. Either you are hedging, which is a whole nother strategy for a whole nother time, or you're just losing, and that's not good, right? So here's the next thing I want to show you. It's Confluence. So let's kind of start that over again. So a little bit bigger so you can kind of see it, right? $15-minute. Right? We see it again. 15-minute. Well, here's what's important. Watch this. We have to understand the cycles of the market. So if two 15-minute candles make one 30-minute candle, and two 30-minute candles make one 1-hour candle, and 4 1-hour candles make one 4-hour candle, how many 15-minute candles make a 4-hour candle? Uh-oh. I got you doing math now. There you go. So that tells you that you need 16 15-minute candles, right? Because you have 4 15-minute candles in a 1-hour in one 1-hour candle, 15, 30, 45, 60. So you have 4 15-minute candles in a 60-minute candle. Times that by 4 because every one 1-hour candle is 4 of them make up a 4-hour candle. So 16 15-minute candles make up one 4-hour candle. So why is that important? Because as we see this structure play out, right, and as we see the market moving, you're going to have opportunities that come in the market that you see the market's moving up, right? Let me fix that a little bit easier for you. You see that happening. We got a pullback. This is happening. And then you're seeing this, something really awesome is happening, right? You're seeing that you have confluence and a cycle is happening. Right now, you're on the 15th candle of a 4-hour candle. You're on the 3rd 1-hour candle of a 4-hour candle. And you're at a place of structure and you're starting to see it push back up. And at this area right in here, you see the market, let's just say, throw a pin bar. Okay. When you see that happen, and you know that the next thing that has to happen is another cycle change, that the next time you see a 15-minute candle flip, that it's not only flipping a 15 and not only flipping a 30 and not only flipping of 1 hour, but that is the 8th candle in the cycle that is going to flip a 4-hour candle, and you're seeing it at a place of structure. Now we should be looking to see if we have an agreement in the market. If we are at a place of structure at that time, and we have a candle that's printing something like an engulfing, a pin bar, a doji, a morning star, something like that, we have some kind of a nice pattern forming. And at that point, we should be looking, are we at structure? Because when this 4-hour candle hits, the majority of the time, that candle is going to take momentum with it. Okay. Why? Because we are starting a new cycle. We are starting a new cycle of currency strength. The cycle has completed. The cycle has already phased out the price of the previous cycle and is now looking to push into whether buyers or sellers are going to take that market sentiment. So at that point, we're looking to see Who's in control? Well, right now we see the buyers are in control, even though we have a little pullback, even though this looks in and of itself, this tiny little thing looks bearish, but we also know that the overall trend is bullish. We have some movement in our direction and cycle is about to change. So right now, yes, we don't trade with bias. We're not just going to jump into a buy just because, but if we start seeing price action throw signals like pin bars and engulfing candles, at that point, we are going to start to understand sentiment is on the bullish side, and we should be looking for something that is going to start our cycle in a direction. We don't want to just take a trade in the middle of somewhere, you know, in the middle of nowhere, right? We want to take a trade that's at structure. So we see something like this and we start to say, well, wait a minute, this candle is about to flip and we're going to see direction one way or another. Well, this is a good safe area to trade anyway. Why? Because if we trade bullish, we have a nice tight stop. If we trade bearish, we have a target that we know we can get to. And normally all we have to do is look left to have a nice tight stop anyway. So at this point, it's a beautiful thing because we kind of have we kind of have the market trapped in a small area where we really don't have to stay in it for very long. We can let the market set a direction and then ride the wave. If it starts to pull out and go this way, well, here's the thing. If we happen to already get in a buy and it goes against us, we have a tight stop. If it stops us out and then starts throwing candles that are going to show the opposite direction, well, all we have to do is wait for the next structure to break. Then we know we're going to go here. And really, we just come in and we take the trade back to the downside and get all of our money back that we may have lost right there. If it does come to the bullish side, well, that's great because we have market structure here. We have a stop loss here. Price starts moving up. And guess what? We move our stop loss into profit and then we scale into the trade. Maybe we started with one small position of, you know, maybe $1 lot size or whatever it is your, you know, market structure or whatever your risk management calls for. And then we scale in. Once we see it break structure and momentum comes, well, now we look for that next little pullback right here and we just look left. If we have the start of a move right here, 1, 2, 3, 4, 5, something like that. When we see that first push, we wait for this. Wouldn't this be a nice move to catch right here? Wouldn't that be nice? Why? Because we already know direction. We already know the direction. And so once we have that break right here and we can scale in, we can add another position at this point, wait for the pullback, and then boom, catch that one right here. Now you really made your money. You got a little bit of money here as direction was set. You waited and were patient for the retest, and now you really made your money. Okay? That's really what we want to do. That's really how we're going to get the market on our side and not trade against the banks, but let the momentum of the banks move us, right? These are just waves, and you guys have heard me say it a lot of times. What are we? We're surfers, right? We're not God. We don't create the waves in the ocean. What do? We let the motion in the ocean take us. We take our surfboard, our little Forex surfboard, and we let the waves carry us where the waves want to go because we're not going to try to go against the momentum of the waves. We're going to try to take the waves momentum and let it pull us with it so that we can ride that momentum to great profit. Okay? So now, all of that sounds good and nice when it comes to talking about it on drawings, but what about real candles? Well, how do we do this on real candles? Well, here, look at this.